Hello, how are you doing today? Hope you are doing great. Welcome back to my channel. This is Phenomenal Peeps. If you are new on this channel, please kindly click on subscription button. Click the bell so that anytime I upload the new video, you will be able to see it. If you are yet not watch, if you are not watch my previous video, please kindly watch it so that you'll be able to understand this video very well. Today I'm going to share with you how to be a profitable trader and how to use pure price action to trade successfully. So some people they used to make losses every day by using indicators and some moving averages. So, and the reason why that they used to lose the money is that they don't know the price action. So if you know the price action, you'll be able to use any tools, whether moving average, indicator, any indicators. You'll be able to know it when you know how to trade confidently, when you know how to use when you know the price action. So you'll be able to use any tools to trade successfully. So as you can see, this is live trading on boom and crash. So, and this strategy I'm just using it for boom and crash to show you that you can use any price action to trade any pairs, whether forex or binary. So you can use the price action to trade any financial market. So some people don't know that we can trade the boom and crash the same way we trade the pairs. So we can trade the boom and crash the same way we trade the other pairs, whether forex or binary. You can trade it the same way. So don't just rely on 1 minute time frame. Use higher time frame to spot your entry and enter your trade competently. You can swing your trade. So you can swing it. So it's very easy. As you can see, this is the running trade. This is the running trade. It's very easy. So what you just need to do is that, so on the future video I upload, I talk about the trend, and some people still messaging me that I didn't explain it well. So if you want to know more about this, you can join our mentorship program, join our training to know how to trade the trend, to know how to use price action to trade. Like I said, when you know the price action, you will be able to trade any tools. You'll be able to know how to trade confidently. So without using any indicator yourself. So you will be depend on your own. You will not depend on anybody or depend on indicator. So you will be a technical trader. So if you know how to trade with this, so that means you are technical trader. So you'll be able to use any tools. So when we talk about the trend, what is trend? So the trend is the movement of the market. So that is the definition of trend. When we talk about the trend for the newbie, so the trend is the movement of the market. Then we have what you call uptrend. We have what you call downtrend. But for uptrend, the uptrend have series of higher highs and higher low, But for the downtrend, we have what we call lower high and lower low. So this is what I mean. This is in downtrend. So if you want to know the downtrend, when you draw your trend line, this red line is our downtrend. So the downtrend will sloping down. So that is how we know the downtrend. When you draw a trend line, you notice that the market is sloping down. So that is our downtrend. And if you open your chart, if you want to trade, what you just need to look for, you don't just jump into the market and buy or sell. No, you first check the movement of the market by draw your trend line. So when you draw your trend line, then you will know the time to enter and do to the late entry. So assuming now you know this is downtrend, so you draw your trend line. After you draw your trend line, what you just need to look for is that this line. So maybe assuming that all this one are not met yet. So when the market touch the trend up here, so you need to see what's happening. The market sold, then it touches again, sold, it touches again, is sold. So that's it. Because the market is ready trend line. But when the market touch the trend line at the up, because for selling opportunity, but before that, let me first tell you something. If you want to be, if you can identify a trending market, it is easy for you to trade with it. So if it's bullish, so you look for buying opportunity. But for here, this is a bearish market. This is selling. You will look for selling opportunity because the market is in downtrend. So for downtrend, so you will look for selling opportunity. Don't buy for this zone. You don't need to look for selling opportunity. You look and you don't need to look for buying opportunity. You look for selling opportunity because the market is in downtrend. So when the market touches here, it's sold. It touches here, it's sold. It touches here, it's sold. So that's why I said that you should join our mentorship program so that you'll be able to know some things, because you know in market and as a technical trader, you will see some series of confirmation before you can enter trade. So when the market touch the trend line here, this is what happening. We see rejection. This is inverted hammer. You see the green this candle, that is our inverted hammer. After the inverted hammer, that is our rejection, because the market didn't broke the trend line. After the inverted hammer, so that inverted hammer shows us that is rejected. Then you wait for bearish candle. After this bearish candle, then you will enter your sell. So that's how we trade with trend line. So your first TP will be at these levels. Then your second TP will be at the trend line. You target the trend here for your second TP. So that is how we trade with the downtrend. So let me show you the sample. This is sample of uptrend. But before that, let me quickly show you the reason why I took this trade. This trade you are seeing, I'm talking about the boom 1000. Let me show you the reason why market here. So as you can see, so the knowledge is power. If you know how to do spot all these things, you'll be able to be a profitable trader. So when market touches here, because this zone, you can call it support and resistance, and you can also call it your zone. Because when the market touches the zone here is sold, then that's our resistance here. Then here it serves as support here. Then again it touches here again, it bounce, it goes up again, it stops at support here again, support here again, because it touches here, it go back, it touches here again, it goes back. Then it broke it here and it tested the trend line. After the trend line, the market bought. Then it broke here. When it broke here, so you wait for what? You will wait for pull back. Pull back. This one is kill zone, because after breakout, you wait for what you call a pullback. After the pullback, you retested the trend line. After the retest, when the market retested this trend line, you will enter buy. So I'm not in the market there. I'm supposed to enter from here. So this is where I enter the market, because I'm not with my this time. So I'm supposed to enter here. If I enter here, I will be in mad profit now. But this is where I enter my market, and I did not close, because when the market broke this zone, it retested the support again. When it retested the support, I know that the market will still go up. So now market is still going up. So that is very easy. So like I said, if you want to know more on how to trade with, if you want to learn how to be a technical trader, join our training. So you will know how to draw the trend line, how to trade with support and resistance, how to trade with candle formation, and how to trade with patterns. So I just want to show you just little of it. So I've already shown you the downtrend now and how to trade with them. So, and we also have we are talking about the trend. I told you that we have uptrend, we have downtrend, we have ranging market. So let me show you the uptrend. Let's look for okay. This one is this is another sample of a downtrend. Wow. So this is another example of downtrend. So you see, when the market touch the trend line, it comes down. So it touches there, it comes down, then it broke the support here, it broke the resistance here, then it retested it, then looking for buying opportunity from here. So what we need now is we look for uptrend. Yeah. So this is an example of an uptrend. When the market is sloping up, when it goes up, so that is our uptrend. When you see the uptrend market, what you look for is buying opportunity. So when the market touches trend line, the market will go up. It touches the trend line, it goes up, touches again to go up. So that is where you enter the market. When the market touches the trend line, then you wait for rejection or candle formation. After the bullish candle, then you enter your buy. So that is how we trade the uptrend. But for ranging market, let me find the ranging market. Ranging market. Yeah, let's use this sample as our ranging market. So when we talk about ranging market, you can also trade the ranging market from here to here. The market is ranging. So how can we trade the ranging market? You see, so when the market from here to here, so that from here to here, you know that the market is ranging. So if you want to trade, maybe you want to buy. When the market touch trend line here, this support, then you wait for a bullish candle. After the bullish candle, you enter buy. So and for sell, when the market touch the resistance at the up, after the bearish candle, you will sell. I don't know if you understand me. So that's how we trade the ranging market. So when we mean by ranging market, that it's not go up, it's not comes down, it's just ranging in between the trend, in between the line. So that is what we mean by ranging. So the market touch here, then after the bullish candle, you buy. Then when it touch the resistance, after the bearish candle rejection, then you will sell. So it's ranging. Then when it broke it here, it restarted it again and changing and up. So and the place that you what caused this ranging, that maybe if the market is in uptrend or is in downtrend, when the market want to change the movement. So that is how this ranging started occur. Then we have what we call choppy trend again, but that choppy trend, avoid them. We don't trade them. What we just need to trade, what we trade is uptrend, downtrend, and ranging market. So we also call the ranging sideways trend. So some people also call it sideways. So that is what we trade, but don't trade the choppy. The choppy, it will not look like uptrend, it will not look like downtrend, and it will not look like ranging. So avoid them, don't trade them. So when the market, you notice that it's not look like uptrend, it's not look like downtrend, so it's not look like ranging, so avoid them, don't trade it. We call them choppy market. So like I said, if you want to know more about the trend and all the other price action, so join our telegram, join our mentorship program to know more about this. So I wish you all the best.